There's a country in Central Asia with a functioning stock exchange, a growing economy, and almost no attention from global investors. It's not on CNBC. It's not in most portfolios. And for most people, it might as well not exist. But that country is Kyrgyzstan. And today I want to break down what's actually going on there and whether it's a market worth paying attention to. Kyrgyzstan sits right in the middle of Central Asia, bordered by China, Kazakhstan, and Uzbekistan. It's a small country, roughly 7 million people, a relatively small economy, around the size of a mid-sized U.S. city. But geography matters. Kyrgyzstan sits along key regional trade routes and is increasingly connected to broader infrastructure and logistics networks tied to China and neighboring economies. And like many frontier markets, it has a young population and a developing economic base. This isn't a dominant economy, but it's not irrelevant either. Kyrgyzstan was formerly a member of the Soviet Union until August 31st, 1991, when it became an independent nation. This is a country with just over 3 decades of modern economic development. Kyrgyzstan's economy is relatively simple, and that's part of both the opportunity and the risk. A significant portion of its GDP is tied to gold production remittances from citizens working abroad, agriculture, and small-scale industry. The Kumtor gold mine, in particular, has historically played a major role in the country's economic output. At the same time, the country remains heavily dependent on external factors, especially economic conditions in Russia and neighboring countries. So while there is growth, it's not fully self-sustaining. And that brings us to another critical factor in a market like this, the role of government. Another factor that's important to understand, especially in a market like this, is the role of government. Kyrgyzstan is currently led by President Sadir Japarov, who came into power following a period of political instability. Since then, there's been a noticeable shift toward a more centralized and, in some ways, more economically focused approach to governance. The government has emphasized greater state control over key resources, infrastructure development, and broader economic stabilization efforts. One example is the nationalization and restructuring of major assets like the Kumtor gold mine, which plays a critical role in the country's economy. Now, depending on how you look at it, this can cut both ways. On one hand, a more stable, development-focused government can create a more predictable economic environment. On the other, increased state involvement can raise concerns about investor protections and long-term governance. So for investors, this isn't just about economic growth. It's about understanding how policy direction shapes the market itself. Now let's talk about the part that almost nobody covers. Kyrgyzstan actually has a stock exchange, the Kyrgyz Stock Exchange. But this is not what most investors are used to. We're talking about a very small number of listed companies, currently between 35 and 40 listings. To put that in perspective, that's smaller than many individual sectors on a U.S. exchange. Extremely low liquidity and limited participation from foreign investors. This is not a market where billions of dollars are moving in and out every day. It's early, very early, and because of that, pricing inefficiencies can exist, but so can major barriers. So where is the opportunity here? Frontier markets like Kyrgyzstan represent what you might call pre-discovery environments. These are markets that are not widely followed, are not heavily institutionalized, and are often priced without significant global participation. In theory, that creates the possibility for outsized returns over long-time horizons. You also have natural resource exposure, particularly gold, potential infrastructure development, and gradual economic formalization. But the key word here is potential. This is not a guaranteed growth story, it's an early stage one. Before even getting into traditional market risks, there's another layer that's critical in frontier markets, and that's currency. Kyrgyzstan uses the Kyrgyz som. And if you're investing from outside the country, especially in US dollars, your returns aren't just tied to stock performance. They're also tied to the exchange rate. Even if a stock performs well locally, a weakening currency can significantly reduce or completely offset those gains when converted back to dollars. At the same time, the SOM has shown periods of relative stability compared to some other frontier currencies, but it's still exposed to external shocks, regional economic conditions, and dependency on remittance flows. In some cases, currency movement can matter more than the stock itself. So when you're looking at a market like Kyrgyzstan, you're not just making an equity investment. You're making a combined bet on the company, the economy, and the currency. And this is where you have to be very clear. When you combine political risk, liquidity constraints, and currency exposure, you start to see why this isn't just a higher risk market. It's a fundamentally different type of investment. You're dealing with political instability, including frequent leadership changes, currency risk tied to some governance, and transparency challenges. And most importantly, liquidity risk. Liquidity risk means you may be able to buy, but exiting a position could be significantly more difficult. And for many investors, that alone makes this market impractical. Now the big question, can you actually invest in Kyrgyzstan? For most people, the answer is not easily. There are no widely available ETFs focused on Kyrgyzstan limited international brokerage access, and very little institutional infrastructure for foreign participation. There are ways to gain exposure, but they tend to be indirect, illiquid, or operationally complex. In my case, I do have direct exposure to this market, and what stands out immediately is how different the process is compared to more developed markets. You're not clicking a button on an app. You're wiring funds, communicating directly with a broker, reviewing available shares manually, and executing trades through signed order forms. That alone tells you everything you need to know about how early stage this market is. So for most investors, this is not a plug-and-play opportunity. So where does that leave us? Kyrgyzstan is not a market for most investors today. It's small, it's illiquid, and it comes with a level of risk that many portfolios simply aren't built to handle. But that doesn't mean it's not important, because markets like this represent the earliest stages of economic development and the kinds of environments where future opportunities can emerge. The question isn't whether you should invest in Kyrgyzstan today. It's whether you're paying attention before everyone else does. It's whether you're paying attention early enough. When you invest in a market like this, you're not just investing in companies. You're investing in a system that's still being built. If you're interested in deeper analysis on frontier and emerging markets, markets that most investors overlook, consider subscribing. This is Frontier Market Intelligence.